Fernando, Leon Capital Group owns a lot of private companies. However, you consider yourself anti-private equity. Can you explain what's going on?
Yeah, so for the better part of 20 years, we've been investing in a series of businesses, and we've never traditionally we've used private partnerships in order to own and operate these businesses. And these private partnerships, we've had dozens of them, and we think that that's the most effective way to compound capital over a large period of time. And so even though we understand the fee-driven business, we're sort of not focused on that. We're focused on compound interest, and I think that that's a better sort of mathematical solution to growing and building wealth.
And what are those private partnerships investing in? It's real estate, it's financial services, it's technology. Tell me about what's actually in those investments.
Yeah, so we own and operate 12 different operating companies, and those businesses are in real estate, they're in healthcare services, they're in insurance, in consumer lending, and other financial services verticals. Incidentally, we also invest in GPs, in asset managers, wealth managers, investment managers, businesses that are in the money management business.
And how are they holding up right now with all the volatility that's going on in the market? And talk a little bit, if you will, about whether or not it's even worth it to check in on them now, because how liquid are they?
Yeah, look, we think about investments in the context of multi-decade, right? So I built this business 20 years ago, and all we're doing is growing these businesses, generating cash flow from them, and reinvesting that cash flow into the growth of those businesses. So we don't think about them in terms of, up cycle, down cycle. We think about that. These are essential businesses, right? We invest in housing, we invest in healthcare. We invest in very basic fundamental needs of American consumers. We have about 5 million Americans that go through our businesses, and we service them with very fundamental needs. And so we don't think about them in sort of the short term.
And how do you get the word out about Leon Capital to RIAs and other investors?
Yeah, some of it is venues like this, so thank you. Some of it is the opportunity to go to the business of attracting wealth managers has been sort of a partnership that has been very two-way street, right? We engage with these folks on deal flows. They send us opportunities to invest. We co-invest with them. They co-invest with us. So it's been a pretty mutually beneficial opportunity. But we speak to them through a large capital formation team. We have 8 people that are talking to RIAs on a daily basis.
And what about the iCapital marketplace? Can people find you there? Yeah. Because there's a lot of high net worth investors, aside from RAs, who shop around over there.
That's right. Yeah, no, iCapital is a great venue, and we engage with them. They're a good partner. We distribute investment partnerships through that platform as well.
Can you talk about portfolio allocation in today's market? So where should people have their money if they're looking at Leon Capital? Should they put a lot of it in real estate or technology, financial services? Where should an investor really be looking to right now?
Yeah. Well, look, I think the American economy is extremely resilient. And so, where we invest in healthcare, for instance, these are basic needs of the American consumer, in dental, in ophthalmology, in veterinary care. These are businesses that are sort of recession resistant. The rental housing business for us has been also an extraordinary place to compound capital. We are also in the logistics business and real estate, where we own warehouses and distribution facilities all across the country, and that's been a pretty resilient place to invest. So the things we invest in are pretty counter-cyclical or non-cyclical.
And speaking of real estate, you're based in Dallas, so Dallas has seen booms and busts when it comes to real estate. What's your outlook for real estate right now?
Well, look, we invest mostly in the Sun Belt. So the markets in Arizona, Texas, Florida, Georgia, the Carolinas, the cities in the Sun Belt have been the largest recipients of corporate relocations from the coastal markets, including New York, movement to Florida, California, movement to Texas and Arizona. And so we see this sort of generational movement of demographics and people and population growth in the markets that we're in. And so Dallas, Austin, Tampa, Raleigh, Nashville, Phoenix, these are some of the fastest growing cities on planet Earth.
And then finally, at the top of the interview, we talked about how you're not the average private market company. There's been a big move towards alternatives, or private market assets. How will we know when it's gone too far?
Well, that's, I think we tend to think that the alignment ought to be there between an investor and their partners. And so we think about things very simplistically. We think about, most of the time in every investment we've ever made in any partnership, we've had anywhere between a third of the capital that we invest is ours, is my capital, and the other between a third to 100% of the capital in any partnership that we've ever invested through has been our balance sheet capital. So we're very aligned with the people that join us, and we understand we're not fee driven. We're not looking at things over the short term. We're thinking about things in multi-decade, and we have so much capital invested that was so aligned. We're really looking to compound it over large periods of time.
All right. Well, thanks for coming on and talking about it.
Yeah, you got it. Thanks.